Right, so we have started recording. So this is home exercise 7.1. So the following is the statement of financial position of Tricor Private Limited as at 31st December 2021 and 2020. So you are giving a set of the statement of financial position SOFP. So there are some notes for us to do the adjustment requirement. You are required to prepare a cash flow statement for Tricor, and then you shall also discuss the importance of cash flow statement in financial statement. So you can see this is 2021 financial data. This is 2020 financial data. So this is this year. This is last year. So when you prepare your cash flow statement, you must make sure that you identify the correct financial year. Okay, normally we do the latest one, 2021. So we look at the individual additional notes. All right, the first one, corporate taxation for the financial year 2020 has been fully paid in the financial year 2021. So for this, we have to look at the taxation here. All right, under your current liabilities taxation, at 2020, we have balances 15,000, and at 2021, we have balances of 25,000. So we do some adjustment for this. So this is for the first one we do is what? Corporate taxation. So for your corporate taxation, we have tax payable account. We have a balance BD at the credit side and also a balance CD at the debit side. For the opening balances, what is the amount? The opening balances is 15,000. The closing balances is 25,000. So we write down 15,000 as the opening and 25,000 as the closing. All right. So in this requirement, what you say? 2020 taxation has been fully paid in 2021. So we take a look in our ledger. So in the ledger, we know that tax payable normally this year income tax we will only pay to next year. It means that this 15,000 is which year taxation? This is 2020 taxation. So for 2020 taxation, we will pay during the year 2021. So tell me, for the payment of your income tax, I should indicate in the debit side or credit side? Tell me, class. Debit, credit. In your tax payable account, I should debit or credit? For the payment. So 2 debit, 2 credit. Hey, so debit or credit? Debit, yes. Why? Because we credit bank account for payment. When it comes to the corporate taxation, we put bank here. Right? We put bank here. So what is the amount we paid? We paid 15,000. Right? We put 15,000. So from here we can do the closing. The closing balances is 40,000 here. So meaning that I have another 40,000 here. The balancing amount is 25,000. This is income tax expenses during the year 2021. So let's figure out the amount to be used in our cash flow statement. So we have this amount. the income tax paid, we will record in our cash flow statement. Income tax expenses is not required to show in our cash flow statement because our cash flow statement starts from profit before tax. It means that tax is excluded from the cash flow statement. Right, this is the first adjustment. Any questions so far? Any question on this? No, huh? All right, we move to the next additional information. So the next information say that interim dividend paid during the year is 6 million. All right, 6 million is 6 plus 0, 1, 6 million. So this 6 million we will show in cash flow statement under the operating activities. All right, we will show this amount 6 million under operating activity as dividend paid. Next, it says that interest expenses during the year is 10 million. So for this additional information, it will link to your interest payable account. Interest payable account. So we have to draw interest payable account for this adjustment. So this is adjustment number 3. So we draw interest payable account. So interest payable account is our current liability. So we have balance BD on the credit and balance CD on the debit. So we take a look inside your interest payable account. 6,000 is 2020 amount, 12,000 is 2021 amount. So 6,000 and 12,000. All right, 6,000 and 12,000. So first we record the opening and closing balances. Next, from the additional information, it said that interest expenses during the year is 10 million. So can you tell me, this 10 million, I have to record in the debit or credit? This 10 million, I have to record in the debit or credit? So Joel say credit, Jocelyn credit, Aiden credit, Jen also credit, Sohui also credit. Any other answer? No, eh? All right, very good. Your interest expenses is on the credit side in the interest payable account. So this is 10 million. So from this comparison, we can identify the missing information, right? The missing information will be the interest paid, your bank payment. So we figure out 16,000. 16,000. So we have 4,000 here. So we have two amounts that we will record in our cash flow statement. The first one is your interest paid and also your interest expenses. These two amounts we will show in our cash flow statement. All right, task, am I too fast? Can you follow? Am I too fast in explaining? No, can follow, All right, let's continue. So it says that one of the non-current asset with a cost of 10 million and accumulated depreciation of 6 million as at 31st December 2020 has been sold in 1st January 2021. The profit from disposal is 1 million. All right, so we draw the account first. So this is related to what? This is related to your non-current asset. And for this non-current asset, we will have cost account. We will have accumulated depreciation account. Right? We have two accounts. Which one is cost? One is accumulated depreciation. First of all, when you do every adjustment, first of all, record the opening balances. So let's take a look. The cost of the asset, the opening balances is 200, the closing is 300. So 200 as opening. So I write short form, 200 as the opening, closing is 300. For the asset account, opening balances is on the debit, the closing is at the credit. For your accumulated depreciation, brought down is on the credit. Brought down amount is how much? 50 and 100. 50 and 100. 50 and 100. All right, class. This, when you adjust the non-current asset, first you have to draw the cost account and also accumulated depreciation account. After that, you record the opening balances for your cost and accumulated depreciation. All right, so can follow? Can you follow me? Are you following me? Yes, huh? All right, very good. So, what is the requirement saying, talking about? The requirement saying that the company dispose one of the asset, right? Because sold refer to dispose. So when you have disposed, you have to prepare a disposal account. So the disposal account, we have to write separately disposal account. So they say that the cost for this disposal asset is 10 million and the accumulated depreciation is 6 million as at 31st December 2020, and this item has been sold in 1st January 2021. It means what? It means no depreciation for this asset during the disposal. Why? Because the closing value, sorry, the opening value as per 2020 December is 10 million and 6 million for the cost and accumulated depreciation. And this asset being sold in 1st January 2021, it means that there is no depreciation for this disposed asset. So we are not required to do the adjustment on depreciation. We can treat it as this 10 million and 6 million as the cost and accumulated depreciation up to the disposal date. All right. So we have to do this adjustment. The cost is 10 million, right? So we have to write the cost on the disposal account on the debit side. We write cost. So this is 10 million. And we will write the disposal here, 10 million. Next, it say that the accumulated depreciation is 6 million, right? So when come to here, we will have accumulated depreciation 6 million on the credit side, and then this amount will appear at the debit side. So we have basically record the cost and accumulated depreciation for the disposed asset. Next, the profit from the disposal is 1 million. So class, can you tell me, profit from disposal appear in which account and what is the double entry? We have to show in the debit or credit. Disposal account and debit is Jewel answer. How about others? Same. Wenqi also same. Yian also same. Any other answer? +1. Credit. Credit where? +2. And you're so lazy. Huh? No, should be on the debit side of the disposal account. All right, the correct answer is here. Gain on disposal. In accumulate, we need to write disposal. Oh, yeah, sorry, the wording here is wrong. We should write disposal. Thanks, Carrie, for highlighting this to me. Okay, the wording is disposal, not accumulated depreciation. All right, we back to here, gain on disposal. How much? 1 million here. So from this comparison, can you tell me that what is the description for this missing amount? Kenson say bank, Jocelyn also say bank. How about this? D, same. All right, this is bank. It means that we have collect 5,000 from the selling of asset. So we can balance the amount. So you see the accumulated depreciation is 6 million. We receive 5 million from the selling of asset. That's why we get 1 million as the gain on disposal. So in this account, disposal account, we have to show this in the cash flow statement. We also need to show this in the cash flow statement. So this is under non-cash transaction, and this collection of 5,000 is under investing activities. So we back to our cost and accumulated depreciation. So we can try to balance the account first. We have a missing amount, right? The missing amount is how much? 110. So can you tell me this 110 refer to what? Yes, very good. This refer to bank. This is the amount that we spend in purchasing new asset during the year. So this amount we will also show in our cash flow statement under investing activities. Very good. All right. After cost account, let's take a look on the accumulated depreciation account. So here 106. Here should be 106 as well. So the missing information 56,000 is what? Jewel say depreciation. Yuki also say depreciation. Ian also say depreciation. Any other answer? Depreciation, very good. This is the depreciation of the asset. And this amount we also need to show in our cash flow statement under non-cash transaction. All right. So anyone having problem in this account? Anyone having problem in this account? You can ask me. I can explain to you. In short, in your cost account, the possible entry in your cost account is disposal and bank, buying of new asset. The typical transaction in your accumulated depreciation account will be disposal as well, and also depreciation. When the company dispose asset during the year, you have to prepare disposal account. And what are the information in your disposal account that will be shown in your cash flow statement? Gain or loss on the disposal, and also the amount that you collect from the selling of asset. Hopefully this explanation is clear to you. Class, so far so good. Which part you want me to explain further? Yes, can understand, All right, let's continue. So we have complete all the additional information, right? We have complete all the additional information. But we know when we prepare cash flow statement, right? We always start from what? Profit before tax. So in this exercise, did the examiner give you the profit before tax directly? Do you have the information of profit before tax directly from the textbook? No, So this examiner, very tricky, very bad, like me. So we have to do some working to find out the profit before tax. Yeah, like me. We have to do some working to find out the profit before tax. Okay, Yi-Seng already gave us some hints on finding out. We can use the dividend to find out. All right, so let's do some recall. Let's do some recall. When this one is in chapter 5, when we learn the statement of financial, when we learn the financial statement for limited liability company. All right, when we learn limited liability company. So which information is very close to the profit before tax? Which amount in the statement of financial position? We can use the indirect method to find out the profit before tax. Yes, Jewel give a correct answer. We can use the retained earnings to find out the profit before tax. All right, so let's do some working. So this working is to find out the profit before tax. So let's draw a sample statement of changes in equity. All right, statement of changes in equity. All right, so we know we have a column called retained earnings. We have a column called retained earnings, and we will have the opening balances, right? We also need to prepare the closing balances, 31st December 2021. So do we have these two information? Yes, we have these two information. Let's take a look. Under our retained earning, the opening balances, which is 2020 closing, is 10,000. The closing balances in 2021 is 40,000. So 10 and 40. 10 and 40. All right, 10 and 40. So it means that at the end of the year, my retained earning is 40. So what are the possible transactions in your retained earnings? What are the possible transactions in your retained earnings? We will have dividend. We will have dividend paid. We will have what? Profit after tax, and we may have transfer. All right. These three are the possible transactions in your retained earnings. But in this question, we know that there is no transfer, right? So we can exclude transfer. So we only have two items, dividend paid and profit after tax. In this question, do we have dividend paid? Yes, we have dividend paid. The textbook, the second additional information, what it said, we have an interim dividend payment 6 million. And this dividend paid is what? Dividend paid is a negative amount. All right, dividend paid is negative amount. Dividend paid is negative amount in the retained earnings. So can we find out the missing information here? Can we find out the missing information here? And what is the amount? $36,000? 36,000? Yes. The profit after tax during the year is 36,000. Because we use 40 minus 10 plus 6 to get the balancing amount, 36. Or you can do the working again, 10 minus 6 plus 36, you get 40. But is this amount that we want? No, this is not the amount we want. Because the amount we want is profit before tax. So we also aware that the working profit before tax, we will minus the tax of the company, so we get profit after tax. So profit after tax we know is 36 million. Taxation of the company, remember the first one we calculate is 25. So we write 25 here, and tax is a minus. So for the profit before tax, what is the amount? Yes, very good. We use 36 plus 25, so we get 61,000. So this is the amount that we are going to use in our cash flow statement. All right, that's all for the workings. Class, do you need a break? Can we have a 15 minutes break? Okay, so you no need to exit the Zoom meeting room. You just remain like that. So I will see you at 10. So let me stop the recording. All right. So now we have to prepare the statement of cash flow. And for statement of cash flow, we start from operating activities. And in these operating activities, this is profit before tax. And remember, this is a this is 1,000 value. This is 1,000 value. So profit before tax, the information we can grab from here, 61. If this is a profit, then the amount is positive. If this is a loss, then become a negative. Next, we adjust non-cash transaction. We start from the expenses. We have depreciation. We have interest expenses. We have income, right? Gain on disposal. So depreciation. Depreciation we can grab from this account, 56. For expenses, this is a positive amount. Next, interest expenses. Interest expenses we can grab from interest payable account, 10,000. For expenses, we put positive amount. Next, gain on disposal. For gain on disposal, 1 million, we put negative. So where to get this negative 1,000? From here. Gain on disposal, 1,000. Right? So basically, we have complete the non-cash transaction. We have complete the non-cash transaction. Next, we have to indicate the movement in your working capital. Working capital. So here, okay, look at the textbook. So working capital. Right, we start from inventories. Inventories from 15 to 1,000 is a decrease, right? Decrease by 14,000. So tell me, decrease of your inventory 14,000, we show positive or negative amount in your cash flow statement. So decrease in inventories. So Aidan answer is positive. How about others? Jocelyn also positive. Positive, eh? Yes. Decrease in your inventory is a positive amount in your cash flow statement. Why? Because when your inventory level reduce, right, it means that you sell more inventory during the year. When you sell more inventory during the year, you have received more cash. So in your cash flow statement, positive amount because cash increase. Next one is your trade receivables from 38 to 32, decreased by 6,000, right? So decrease in your trade receivables, what is the impact in your cash flow statement? What is the impact in your cash flow statement? Decrease in trade receivables. So to say positive. How about this? Yes, positive 6,000. Why positive 6,000? Because when you have a decrease in trade receivables, means that you collect more money from your customer. When you collect more money from a customer, meaning that this is a cash inflow to the company. Oh, Jason, it's okay, don't worry. I have recorded this video, so you can take a look later if you miss out any part. All right. So let's move on. So the next item is our trade payables, right? Trade payables from 10,000 to 15,000. 10,000 to 15,000 should be increased, right? Increased by 5,000. So if you have increase in trade payables, What is the impact? Positive, positive by 5,000. 5,000, yes. Why positive? Because when you have increase in trade payables, means that you have slow payment to your supplier. If you have slow payment to your supplier, meaning that you are keeping more cash in your company. So in your cash flow statement, we will show a positive amount because you keep more cash in the company. All right. So basically, we have complete the non-cash transaction and also changes in your working capital. So remember to draw the line. Okay, remember to draw the line. This is also required in your exam. Sorry, this is 5,000. Right. So what is the total amount? 151 million. Right. Then what is this? This is operating cash flow. Right. Cash flow from operating activities. Okay. Outcome 151. So after that, we will minus tax paid, interest paid, and also dividend paid. Tax paid, look at the first adjustment. The tax paid is 15,000. Tax paid, we will put negative. And then interest paid, we look at interest payable account, 4,000. Interest paid, negative. Dividend paid, we look at the dividend payable account. Sorry, not dividend payable account. We look at retained earnings, minus 6,000. So we can get the amount. One to 6,000. This is net cash flow from operating activities. Right? 1 to 6,000. Next section, we will show the cash flow from, we just write investing activity, right? Investing activities. So the first one will be purchase of non-current assets. The amount that we spend on the purchase of non-current asset, 110,000. And we also have proceeds from disposal of non-current assets. This refers to the amount that we collect from the sale of the asset. 5,000. So for the collection, it's a positive amount. So the net amount is a negative 105. So this is net cash flow used in investing activities. So the next section will be financing. For the financing activities, we should look at the company non-current liability. Okay, non-current liability. We look at the debenture and also share capital. So debenture 2020 is 50,000 and 2021 is 20,000. So meaning that this amount decreased by 30,000. So class, tell me, when you have a decrease in your debenture, it means that your debenture, you repayment of your debenture or you obtain a new debenture from your creditors. This 30,000. Sure answer is repayment. How about others? All right, I repeat my question again. The debenture decreased from 50,000 to 20,000. Showing decrease, right? When you have decrease in your debenture, this is a repayment or you obtaining the new debenture during the year. Yoo-hoo! Any other answer? Woo-hoo-hoo. Yeah. Aiden say repayment. Ethan say same. Try to participate. Try to participate. So it's a repayment, right? So repayment of debenture. The amount is 30,000. When you repay your debenture, this should be a negative amount because your cash in the company will reduce. Right? Repayment. Next, our share capital from 100,000 to 150,000. This shows increase, right? Increase by 50,000. So when you have increase in share capital, it means what? Why your share capital will increase? What is the reason for increasing your share capital? Sale. We don't sell our share. Sell our share. But we use another term rather than we sell our share. What is the term that we use? We don't use sales of the share, the terms. Yes, the correct term to use is issues of share. The company issue their share to the shareholder so they can receive money from the shareholder. The term that we use is issue of share. So from the issuance of share, how much we receive? We receive 50,000. So issue of share capital. We get 50,000. Right? So the net amount is 20,000. So net cash flow from in financing activities. Right? So basically we have complete our operating activity cash flow, investing activity cash flow, and also financing activity cash flow. So we can do total your operating cash flow plus investing activity cash flow and your financing activity cash flow is a positive 41. Meaning what? Increase in cash and bank balance. Right? Increase in cash and bank balance. So we have opening cash and bank balance, and we have closing cash and bank balance as well. So take a look our opening cash and bank balances. Opening is 2020. 2020, we don't have any cash and bank balances. We have a bank overdraft 12,000. We know bank overdraft is a negative amount in the cash flow. So we write negative 12,000 here. So the total we have is a positive 29,000, right? So we will match this amount to our cash and bank balances. Yes, our cash and bank balances as per 2029, as per 2021 is 29,000. And this amount can match to the cash flow statement. Meaning that we have do the cash flow statement correctly, right? So this is the answer, and you can have a look. All right, class, any question for this exercise? You got question or not? Temporary, no. Okay, very good. So we have completed the first requirement. So second requirement, discuss the importance of cash flow statement in your financial statement. So we can refer back to our page where page 110. Here show you the importance of cash flow statement. First, cash is extremely important to a business. Without cash, the company may not be able to continue in business. Business may make a profit but become bankrupt due to run out of cash. Cash flow statement provides information of the cash flow of the company that is not available in the income statement and statement of financial position. Because in your statement of financial position, it will only show you the balance amount. It will just show you the balance amount. So you will not know how the company use their cash in the business. So cash flow statement is important. Cash flow statements reveal the cash effect of movement in working capital. Cash flow statement shows the source of cash in the period together with how the cash has been spent. Cash flow statement can help to identify whether a company has react to over-trading situation. Means expansion is too fast and rapid but without sufficient cash inflow to maintain the operation or support the expansions. Cash flow gives an assessment of solvency. Cash flow statement can be used as an indicator for future expansion if a company has sufficient cash in hand. And also, cash flow statement has eliminated non-cash transaction. Thus, it provides a better picture on the quality profit, as in whether the profit is in real cash or merely accounting adjustment. This is highly important when you plan to invest in the share market, because some of the listed company, they may try to manipulate the account to show that the company is having a very good profit. But in fact, those profits are not real. For example, the company may show that they earn millions in a year, but those millions is through the valuation of asset. Those valuation of asset, yes, it will show a profit to the company, but this profit is not real because it is merely an accounting adjustment. The company did not receive any cash from the revaluation. All right. So cash flow statement is very useful for you to identify whether the company is good in investment. And last one, cash flow statement is not affected by accounting policy, thus it allows investors to have better comparison between two companies. All right, that's all for home exercise 7.1.